Welcome to our presentation on Takaful, a modern, ethical alternative to conventional insurance rooted in Islamic principle. Today, we will explore how Takaful promotes cooperation, social responsibility, and financial security while adhering to Sharia law. Let's delve into what makes Takaful a unique and sustainable approach to protecting individuals and communities. Takaful is an Islamic insurance model that operates on the principles of mutual assistance, cooperation, and shared responsibility. Unlike traditional insurance, Takaful emphasizes collective risk sharing, where participants contribute voluntary payments into a common fund to cover potential risk. It is designed to promote fairness and social solidarity, providing financial aid for health issues, accidents, or property damage. Rooted in Islamic values, Takaful ensures that activities and investments are free from interest, uncertainty, and gambling, making it a moral and community-oriented way to achieve financial security.
Now, I will explain two important concepts in Islamic finance, which is riba and zakat. The first concept is riba, which refers to any predetermined or guaranteed interest charge in financial transactions. In Islamic finance, riba is strictly prohibited because it is considered unfair and exploitative. This is because one party receives a guaranteed profit without sharing any risk, while the other party bears the financial burden. For example, in a conventional loan, a borrower may be required to repay the original amount together with additional interest. Islamic finance avoids this practice by using Sharia compliance contracts that are based on trades, partnerships, or asset ownership rather than interest-based lending. The prohibitions of riba reflects the Islamic principle of justice and fairness in financial dealings. It encourages financial transactions that benefit all parties involved and prevents the exploitation of those in need of financing. Second concept is zakat. Zakat is one of the 5 pillars of Islam and refers to the compulsory charitable contribution paid by eligible Muslims. It is generally calculated at 2.5% of a person's eligible wealth and savings. The main purpose of zakat is to purify wealth and promote social welfare. Through zakat, wealth is redistributed to support those who are less fortunate, including the poor, the needy, and other eligible groups in society. In the context of Islamic finance, zakat plays an important role in promoting social responsibility and economic justice. It helps reduce poverty, narrow income inequality, and strengthen community well-being. In summary, riba and zakat are two fundamental concepts that distinguish Islamic finance from conventional financial systems. Where riba is prohibited to ensure fairness and prevent exploitation, zakat is encouraged to promote social welfare and equitable wealth distributions.
Hi, my name is Zubaidah and I will explain about factors in purchasing Takaful. The first factor is protection against unexpected financial losses. One of the primary reasons people buy Takaful is to protect themselves financially from unexpected emergencies such as accidents, illnesses, impairments, natural disasters, or death. Individuals and their families may face severe financial difficulties as a result of these occurrences. By providing monetary compensation in the event of such case, Takaful acts as a safety net, assisting participants in recovering without losing their assets. Second, financial security for family members. In order to guarantee their family members' financial stability in the event of disability, serious illnesses, and death, people frequently buy Takaful. Family Takaful gives financial benefits that can assist relatives in living their daily life without experiencing financial difficulty. The third one is asset and property protection. Takaful is commonly used to protect important assets such as homes, vehicles, and enterprises. Accident, theft, fire, and natural disasters can all cause significant financial damage. Participants in Takaful can replace or repair damaged assets without having to pay for everything themselves. The next one, the importance and impact of Takaful. The first one, the importance of Takaful is to provide financial protection. Takaful main purpose is to offer financial protections against unanticipated risks such as fire, natural catastrophes, sickness, accidents, impairments, and death. By securing that, participants receive financial support in the event of losses. Takaful helps to avoid extreme financial difficulties. For example, a participant diagnosed with a serious illness may be eligible for Takaful benefits to cover the expensive medical treatments and hospitalization. Second, to improve business stability, Takaful assists organization in risk management by safeguarding assets, personnel, and operations from unexpected losses. After significant incidents, this guarantees corporate continuity and lowers the possibility of financial collapse. For example, a manufacturing corporation might use business Takaful to cover losses caused by fire damage to factory equipment. The third one, support economic growth and investment. Takaful operators receive long-term funds from their clients and invest them in Sharia-compliant assets. This investment supports economic activity, capital formation, and the growth of Islamic financial markets. As the Takaful industry expands, it generates savings and directs funds to productive sectors from the company. Contribution from participants may be invested in sukuk, Islamic funds, or halal commercial projects, resulting in economic activity and national growth. The fourth one, encourage savings and wealth preservation. Takaful savings and investing components have a positive impact since they improve individuals and households' financial stability. Participants take advantage of risk protection while progressively building financial resources that can be used for future needs. This decreases the possibility of financial trouble when unexpected circumstances occur.
So, for the example that we choose is Etika. Etika is the insurance and Takaful arm of Maybank, the most largest banking groups in Asia. They offer conventional insurance and Sharia-compliant Takaful product. They established under Etika brand in 2007. The headquarters is in Kuala Lumpur, Malaysia. They also operate in Malaysia, Singapore, Indonesia, Philippines, and Cambodia. The current Etika brand was created after a merge involving Maybank Insurance and Takaful Business, Malaysian National Insurance (MNI), Takaful National Sendirian Berhad. But in 2007, the merged entities were rebranded as Etika Insurance and Etika Takaful. As I mentioned earlier, they're offering conventional insurance and Sharia-compliant Takaful product. For the combination of Etika Insurance and Etika Takaful, they have Family Takaful, General Takaful, Life Insurance, General Insurance, Medical Protection, Investment Link Plan, Motor and Travel Coverall. This is the most general, well-known insurance at Takaful. But in here, I will more focus on Family Takaful. The most common benefit that purchaser will purchase Etika Family Takaful is because, first, the financial protection. They provide financial support to beneficiaries in the event of death or total and permanent disability, TPD. The next one is Sharia compliant. They operate according to Islamic principle of mutual assistance and risk sharing. And the last one is the most common reason purchaser will purchase this product is because of their flexible coverage. They offer optional riders such as a medical critical illness and accident coverage. But the purchaser will face a little weakness in Etika Family Takaful is because the regular contribution required. The coverage may be affected if contributions are not paid on time. The second one is coverage exclusion. Some illness, condition, or situation may not be covered. And the last one is higher cost for more benefit. Adding riders and higher coverage increases the contribution amount.
Now I will talk about the recommendation to improve. The first one is protection against unexpected financial losses. When we talk about protecting ourselves against unexpected financial losses, we need to shift our mindset from conventional insurance to the Takaful model. Takaful is built on the concept of tabaruk, which means donation. Unlike conventional insurance, when you risk transfer from a company, Takaful participants actually guarantee each other. You are pooling resources to help one another. This collective pool is incredibly relevant today as we face rising modern rates. Think about the soaring medical inflation rates, growing cybersecurity threats to individuals, and the devastating climate change-induced floods we recently experienced right here in Malaysia. When disaster strikes, this collective pool acts as an efficient instrument for speedy financial recovery. It injects immediate cash flow so individuals and families can recover quickly without being forced to liquidate their hard-earned assets or property at loss. For the second point, financial security for family members. Moving on to family financial security, our goal is to move past generic safety net arguments and to look at a powerful Islamic estate planning solution. The most critical tool here is hibah takaful, or a conditional gift. Typically, when a Muslim passes away, their asset goes through the faraid system, the Islamic law of inheritance. While faraid is divine law, the legal distribution process can be lengthy, often leaving families frozen out of cash when they need it the most. By utilizing hibah takaful, the fund bypasses the asset administration process entirely. The money goes directly to the nominees, providing immediate cash relief to the grieving family. This serves as a form of income replacement strategy. By covering primary breadwinner, we ensure that the household lifestyle is maintained, and future milestones like a child education fund remain fully secure. For the third point, asset and property protection. Let's look at the asset and property protection. To understand how the market addresses this, we look at two distinct segments of the industry. The first one is general takaful for individuals. The second one is commercial takaful for business. For enterprise, protecting physical property isn't enough. A disaster can halt operation entirely. This is where business interruption takaful become vital. It doesn't just recover the cost of repairing a damaged building, it takes off ongoing cash flow and operational continuity while the business gets back on its feet. For individual homeowners, protecting their most important life position comes down to practical mortgage protection plan. Homeowner can choose between MRRT, and that's mean mortgage reducing term takaful, where the coverage decreases along with the reducing bank loan, or MLLT, mortgage level term takaful, which means maintain a constant coverage amount. Both to ensure that if something happens to the breadwinner, the family home is fully paid out secure.
In conclusion, Takaful is a Sharia-compliant insurance model that fosters mutual support, justice, and social solidarity. By emphasizing collective risk sharing and Islamic principles like tabaruk and zakat, it is not only provides financial security and asset protection, but also contributes to community development and economic stability. To further strengthen Takaful offerings, expanding product variety and incorporating Islamic estate planning tools can improve address drivers' needs. Ultimately, Takaful presents a fair, ethical, and sustainable alternative to traditional insurance, adapting to societal changes while upholding Islamic values and promoting societal welfare.